Central banks turn hawkish. Keep your eyes on these three battlegrounds next week.
March's Super Central Bank Week has wrapped up, but the shockwaves are just getting started. This week, the global monetary policy landscape experienced a massive shift, rapidly pivoting from early year rate cuts to a collective hawkish hold. Today, DBG Markets helps you quickly recap this week's highlights and lock in the three most critical battlegrounds for next week. This week, the Fed, Bank of England, and RBA all showed their hawkish cards. The most shocking move was the upward shift in the Fed's dot plot, with Powell admitting some internal voices favor zero rate cuts all year. Right after that, driven by US-Iran geopolitical tensions, oil prices firmly established themselves above the $100 mark, igniting fears of a second wave of inflation. This triple threat of high rates, high inflation, and geopolitical risks directly caused gold to face heavy resistance, while global equities shifted from buy the dip to a defensive retreat. Entering next week, focus will shift from central bank speeches to the physical economy. On Tuesday, we get the March flash PM is for the US, Eurozone, and UK. This is a crucial indicator to measure whether the global economy is stalling under the double squeeze of high rates and high oil prices. Besides that, please keep a close eye on these three main storylines. First is the energy lifeline. Can Brent crude hold above $100? As long as oil doesn't drop, the central bank's hawkish stance won't loosen. Second is the yield curve. The upward shift in global long-end yields will continue to deliver a sustained blow to the bond market and high valuation assets. Lastly is sticky inflation. The risk of energy-driven secondary inflation will push upcoming market volatility far beyond expectations. Under the pressure of high yields, gold is taking the first hit. Although geopolitical conflicts provide a safe haven shield, the spike in US Treasury yields massively increases the opportunity cost of holding gold. So while gold can hold above the 4,500 support in the short term, its upside remains clearly capped. Meanwhile, the stock market will continue facing threats under these three headwinds, meaning the central banks have shown their hawkish hands, and next week we'll see how the real economy and oil respond. Under this macro backdrop, risk sentiment will lean much more defensive. This is DBG Markets, keeping you ahead of the curve. See you next week!